This episode is brought to you by Progressive Insurance. You chose to hit play on this podcast today. Smart choice. Make another smart choice with Auto Quote Explorer to compare rates from multiple car insurance companies all at once. Try it at progressive.com. Progressive Casualty Insurance Company and Affiliates. Not available in all states or situations. Prices vary based on how you buy.
DSW, Designer Shoe Warehouse, is the one-stop shop for all your footwear needs. With sneakers, boots, and everything in between for every style, mood, and occasion, you'll definitely find shoes that get you at prices that get your budget. DSW has what you need, but more importantly, they have what you didn't even know you wanted. You never know what you'll find at DSW. Find the shoes that get you at prices that get your budget at DSW stores or DSW.com.
Welcome back to another episode of Investies. I'm your host, Linda Garcia, Texas State Representative and author of the book Wealth Warrior. This week on the podcast, we are going to discuss the Netflix deal that is driving Wall Street crazy. But before we get into that, let's take a look at how we performed last week in the market. Now, if you remember, we have had some fears in the market about a potential AI bubble. We had been trending downward. However, it looks like we are making some type of recovery. And I know that our attention right now in Wall Street is fixated on Netflix, so I do think that that has helped. But it looks like we may be in the safe zone as we are nowhere near correction. Now, just as a reminder, a correction is a drop of more than 10%. The Dow Jones last week was up 1.19%. The S&P 500 was up 0.85%, and the NASDAQ was up 1.55%. Now, from our all-time high, the Dow Jones is down 93%. The S&P 500 is down 0.53%. The NASDAQ is down 1.64%. So as you can see, it looks like we are almost getting very close to a full recovery. The last time I saw a news cycle this obsessed in the stock market was with the GameStop saga. I'm actually kind of in shock that it is garnering this much attention. I get it. It is a big deal. Of course, it doesn't help that the Trump administration is now getting involved. And then we have a lot of uproar from Hollywood. Before I get into this week's episode, I want to be completely transparent and disclose that I am a Netflix investor. I have been an investor since 2013. And just as of recently, I began building a new position with Netflix. This means that for the first time since 2015, I did begin to buy more shares. One of the reasons that I decided to buy more shares is because a tweet that Elon Musk did where he said to cancel Netflix because of a woke agenda. And so that made the stock drop, and I decided that I would take advantage of that drop and purchase more shares and begin building another position with Netflix. Netflix also completely changed my life. It is the reason why we are having this conversation today. It is why I began learning about investing, and because it changed my life, I wanted to share what I learned through the process with everyone else. It bought me a house. My shares sustained me during hard economic times. My portfolio allows for me to borrow money against the portfolio. it has just been completely life-changing. And so it is important for me to disclose this to you as we have this conversation. And of course, I will be sharing facts, but I also do want to share my perspective because I think it is valuable not only as an investor, but also as a former Netflix employee and someone that spent 17 years working in the entertainment industry and 10 of those years in Hollywood. Now, as I started this new Netflix position, I did take a look at levels of support and resistance, which means that I am looking at the chart for potential points of entry that could make my purchase a really good deal. This keeps me focused on looking at the stock dropping and getting excited for that versus looking at the stock dropping and panicking and selling out for it. I'm looking for opportunities and I'm looking to purchase the stock on sale. So what I do is I look at levels of support and resistance. I mark those levels and then I place a buy order for whatever level it hits. I tend to not buy a lot of shares. I just sort of use it as an alarm as, hey, you bought shares at a really good level. Something is happening. Take a look at the portfolio and see if you want to purchase more. I do this with all of my positions in my portfolio. Last month, I did a workshop on how to identify levels of support and resistance and execute early buy orders so that you don't necessarily have to stay tethered to the market. It is an automatic purchase that happens. You can head over to patreon.com/investies to check out that workshop and many other valuable workshops. Friday morning, I was in a meeting and not on the news. I was working on some district stuff, and I see that I get the notification that I had just purchased 10 shares of Netflix at a very low level. I knew immediately that something was up, and as soon as I got on the news cycle, I was astonished by all of the chaos that was taking place. Netflix and Warner Brothers announced that they closed a deal. Now, Warner Brothers had been trying to sell parts, if not all, of Warner Brothers, and they had bids from Paramount Skydance as well as Comcast. The analysts are calling it a dramatic bidding war that Netflix won. And so currently, the market is in uproar. So is Hollywood. And of course, so is the Trump administration. The Trump administration commented that it was highly skeptical of this Netflix and Warner Brothers deal. And immediately after that was released, we began to see the stock tumble. It went as far down as 4.23% on Friday. The Netflix deal is for $72 billion to purchase pieces of Warner Brothers Discovery. They have agreed to Warner Brothers Global as well as their streaming service. And of course, they will be purchasing their library, which includes The Wizard of Oz, Harry Potter, DC Comics universe. Of course, everything under HBO, The Sopranos, Game of Thrones, Sex and the City. All of those assets will be owned by Netflix if the deal goes through. The deal has to be approved by the Securities and Exchange Commission, so this is not final. They are anticipating that if this deal closes, it will take place by the third quarter in 2026. Now, I'm going to be honest here, it's really not looking good. And so many more things are coming up in just over these last 3 days that makes it look like this deal can potentially be impossible. Netflix has agreed to pay $5.8 billion reverse breakup fee if the deal is not approved by the SEC, and Warner Brothers Discovery would pay $2.8 billion breakup fee if it decides to call off the deal to pursue a different merger. The night before the deal closed with Netflix, Jane Fonda wrote an op-ed warning of the potential dangers if Warner Brothers Discovery sold. Here's a part of what she said in her op-ed. Regardless of which company ends up acquiring Warner Brothers Discovery or its parts, The resulting impact is clear. Consolidation at this scale would be catastrophic for an industry built on free expression, for the creative workers who power it, and for consumers who depend on a free, independent media ecosystem to understand the world. It means fewer jobs, fewer opportunities to sell work, fewer creative risks, fewer news sources, and far less diversity in the stories Americans get to hear. For actors, writers, directors, editors, designers, animators, and crew fighting for work, consolidation will lessen the overall demand for their skills. And when only a handful of mega companies control the entire pipeline, they gain the power to steamroll every guild. She goes on to list all the guilds and says it will make it harder for workers to bargain, harder to stand up for themselves, and harder to make a living at all. I think that this was an incredibly important op-ed written by Jane Fonda to really alert Hollywood of what was taking place with Warner Brothers. As someone that worked at a movie studio, several movie studios, I know what it is like to work in those spaces. I was continuously, not just myself, but myself and my colleagues were severely underpaid and overworked. We did the job of so many people and we just grinded it out, no complaining. We met expectations. We were all trauma bonded. We grew up in this boot camp of sorts with horrible working conditions. And then we had a new player on the scene. Netflix came to Hollywood.
A mochi moment from Sadie, who writes, I'm not crying, you're crying. This is what I said during my first appointment with my physician at Mochi, because I didn't have to convince him I needed a GLP-1. He understood, and I felt supported, not judged. I came for the weight loss and stayed for the empathy. Thanks, Sadie. I'm Myra Ahmed, founder of Mochi Health. To find your Mochi moment, visit joinmochi.com.
Sadie is a Mochi member compensated for her story.
When the holidays start to feel a bit repetitive, reach for a Sprite Winter Spiced Cranberry and put your twist on tradition. A bold cranberry and winter spice flavor fusion, Sprite Winter Spiced Cranberry is a refreshing way to shake things up this sipping season, and only for a limited time. Sprite, obey your thirst.
What I think is really cool about Silicon Valley companies, tech companies, obviously, entering new spaces that they never entered before is that they don't do things the way it is traditionally done. The same can be said for the assembly of a Tesla car versus a traditional car. Especially as an outsider, the existing industry is known to not allow for a new industry to come in and, see how they operate, which I think is not great for the existing industry, because what happens is you have creativity that starts to emerge out of necessity. And when Netflix came to Hollywood, they treated us completely different than what the industry treated us like. They treated us like a tech company. We had never been treated like that. I went from making $13 an hour, where I was managing a $4 million budget, spending all the money within that budget. I was also coordinating all of the press tours, locking in all of the hotels in Los Angeles, New York, Miami, Chicago, and of course, I would always advocate for us to go to Texas, and sometimes they would let me do it. But I was managing all these press tours, traveling with the talent, booking the cars, booking the flights, booking the hotels for their stay, being a talent handler. It was wild. And I was making $13 an hour. Netflix hired me, and all of a sudden I was making $100,000 a year. We had kitchens that looked like 7-Elevens. We had breakfast, fresh breakfast every morning. We had lunch catered every single day. And it was the best golden handcuff experience I had ever had. I was working in a tech company, getting paid enough for me to not complain about the workload that we had. Also, massive workload, a big responsibility, especially when you're getting compensated properly. The expectations are just exponential. And so when they entered the scene, all of us as employees had a completely different perspective of what Hollywood can potentially look like. Not only that, but the deals that we were closing and acquiring more content, we were overpaying from what the other studios were paying for content. Once we started production, we were overpaying on production. We were overpaying on talent. We were giving the best deals. And that's because that's how a tech company operates. They invest in the people that are going to produce the product because they know that if you pay adequately, you will get the best possible product on the market. After reading the Jane Fonda op-ed, which I read the day of the deal, I didn't read it the night before, I couldn't help but to think to myself, I wonder how Hollywood is feeling now that it is Netflix that landed the deal. I wonder if the sentiment changes. And so I sent out text messages to some of my friends that are writers, that are producers, that have created incredible pieces of content that you all have heard of. And I started asking questions. And the consensus was, yeah, Netflix is the better one of the company. And yes, Netflix is still paying top dollar for all of their employees and, of course, all of the production that is coming out of Netflix. But it doesn't stop what the dangers are in the theatrical space. And I get it. But I also had to stop and think to myself as I'm having these conversations with my friends, the theatrical space is dying. I certainly am not going to the movies as much as I would. And my friends pushed back and they're like, yeah, that's because streaming companies are happening. That's because they are acquiring the content and people would rather watch at home. And to me, it was like, yes, but also people don't have the money to go to the movies. Everything is so expensive, that entire experience. It's not just the movie theater ticket, but it's also the popcorn and the drink and everything that comes with that. So I thought to myself, let me look at the numbers. I started to look at box office numbers, and I was in shock to see that 2024 and 2025 had the highest grossing box office numbers in history. And I was like, wait a minute. Are we accounting for inflation? Forget looking at box office dollars. Let's look at ticket sales. I wanted to look at ticket sales. I started to look at ticket sales, and I was shocked with what I found in ticket sales. For 2025, so far, we have had 760 million tickets sold. In 2024, we had 761 tickets sold. Now, so that we can properly put this into perspective, I want us to take a look at 2019 ticket sales, pre-pandemic, because yes, the theater took a hit during the pandemic. In 2019, we had 1.24 billion ticket sales sold. 2020, 230 million, big hit. 2021, 444 million. 2023, 828 million. So once the movies were open again, we did see an appetite in 2023 at 828 million tickets sold. And then in 2024, that dropped. In 2025, we'll see where we land. So of course, I wanted to go back and take a look at what year we had 760 million in ticket sales so that I can see how long ago and what the trajectory has been to reach the growth that we had in 2019, which was 1.24 billion in ticket sales. I started to go back. The 2000s, the 90s, the 80s. And you will not believe this, but never in the history of histories have we had ticket sales at 760 million. If we were to go back and look at ticket sales in the 40s, we were hitting numbers like 1.32 billion, which is the numbers that we were hitting back in 2018. In 2018, we hit 1.3 billion. That was the same amount of ticket sales that we had back in the 40s. Theater is dying. And so I think it makes sense that Warner Brothers has been trying to sell and has been sold over and over and over again. The business is just not as lucrative as it once was. And it is getting harder to make that recovery to where we were pre-pandemic. The studios are burning through money. And I think not only that, but the cost of production is only increasing. And so to me, it makes sense that Warner Brothers has been so desperate to make a deal. I don't necessarily think that there's some big agenda to stop theatrical releases. I think that we as consumers are the ones that determine how many theatrical releases we are willing to go and attend. Being an investor in technology and then researching the history of the evolution of technology has really helped me to identify the amount of resistance that happens in the beginning of an evolution, in the beginning of a change, whether it is no longer painting portraits by hand and moving into using a camera, or no longer having operators on a switchboard and having it be automatic. There is always massive resistance for something that eventually depreciates in value, which then makes it cheaper for us to consume or buy into, and also makes our lives much easier. I see the resistance continuously, and I think there is a massive resistance to potentially leave theater and move into streaming. Do I think that theater altogether will go away? Absolutely not. They said the same thing about the opera when movie theaters came, that people were no longer going to see the opera. That still exists. It hasn't gone away, and people still get their portraits painted if they want to do that. That hasn't gone away. Now, operators on a switchboard, that's a different story. I think that has evolved to potentially call centers. What I'm trying to say is that I think this is part of evolution. Now, am I defending the fact that if Netflix acquires this, they can be a monopoly? Absolutely not. But that's why we have the SEC in place. This is why we have agencies that will take a closer look and make sure that this is not a monopoly. And you know what? It can definitely end up that this deal does not go through and they are identified as a monopoly. And so here is where I see the trajectory for the stock in the next year. I think it's going to be an extremely volatile stock. And for those that have the ability to be long-term investors and stay in the stock for the long term, we have an incredible opportunity. If you are an investor and you're still dealing with short-sightedness, you panic at volatility, this is not the investment for you. I do think that we can find opportunities this year. I think the stock is going to drop even further than it has dropped because they are going to go through a thorough investigation and things are going to come up that may not be favorable to Netflix. In the long run, I think that I don't know for a fact, but I have the conviction for me and my portfolio that this is still a strong investment. I felt that way long before Netflix landed this deal. If this deal went away, it does not change the fundamentals or my perspective on where the company is headed. I definitely see the dangers. We have Trump that is getting involved. He is friends with Larry Ellison from the Paramount Skydance deal. Paramount Skydance just filed to put in a term offer. I'm still learning about what all of this means, but essentially they are fighting back on why they did not get chosen for the deal. And so this is going to get relatively ugly. It's also uncovered that Larry Ellison has Oracle stock and that the money to purchase Warner Brothers was coming from his Oracle stock. The day that all of this went down, Oracle was given an upgrade. An upgrade is where an analyst sort of gives a buy signal and says, you should buy this because XYZ reason. There really wasn't a catalyst. The analyst gave the buy order. The stock went up on that same day. Larry Ellison became the second richest person in the country. And then he also opened a holdings company. A lot of suspicious activity there that I think we should most definitely be paying attention to. It really sounds like Trump wants this deal to go to Paramount, which makes me feel like this deal should stay with Netflix if that's what Trump wants, because it doesn't sound like Warner Brothers is interested in maintaining this as a business. It looks like it definitely wants to sell the parts. So we still have the story developing. As I'm talking to you right now, I'm looking at the news. I'm looking at CNBC, and it says Paramount Skydance launches hostile bid for Warner Brothers Discovery. Paramount is going to go after Warner Brothers and try to take back that deal, take it away from Netflix. It's going to be a bumpy ride for us as Netflix investors. Like I said, if you are a long-term holder of Netflix and you plan to keep it for 10 years, this is a massive opportunity. We do have a little bit of breaking news here coming in at the very last minute on this week's episode of Investies. It turns out that the Paramount hostile takeover, a portion of it will be funded by Affinity Partners, which is Jared Kushner's company. So, America. Thank you for listening to this week's episode of Investies. I'm your host, Linda Garcia. Investies is a Cosmic Standard production. A special thank you to our team, Asia Simpson, Eliza Smith, and Jacob Winnick.